Welcome back. You're watching Buy or Sell. It's time now for our mutual fund special. Two special guests join us now on the show. We have with us Rajesh Krishnamurthy, Managing Director, iFast Financial and Fund Supermart.com, and so does Jayant Pai, VP and CFP at Parekh Financial Services. Let me quickly go across and bring in our first caller. We have an SMS that we have from Rajesh Chande. He is writing to us from Mumbai, and he has a very, very big mutual fund portfolio, a total of close to 25 funds that he has with him, ranging from HDFC Top 200 to BSL Frontline, DSP-BR Top 100, going on to HDFC Prudence, DSP-BR Microcap, Equity, Religare Contra, going on to Reliance Regular Savings Fund, and total of close to 25 funds is what he has in his portfolio. And he wants to know, which every mutual fund investor wants to know, is this portfolio going to give him good returns in the long term? Rajesh, let me start with you. I'm sure you have had a look at his portfolio. Is it a bit too big? Is it fairly diversified? Does it have the potential to generate strong returns for him?
I mean, Ashu, this is a typical issue that we find with many investors, like picking stocks of different companies from different sectors. Many investors believe that if you keep adding more and more mutual fund schemes onto your portfolio, it really brings in diversification. But unfortunately for the gentleman who shared this portfolio, I think his portfolio does require a bit of surgery, if I can use that word, because too many overlapping schemes, too many objectives, clashing. So I think in general there are many funds that are good to hold, and a few funds like the Religare Business Leader that we would maybe say it's good to exit. But in general, what I would request the viewer to do is, if he would like to go and sit with a financial planner, at least he can then clean up his portfolio and shrink it down to maybe 7 or 8 funds and not more than that. That's my take on his portfolio.
Jayant, you agree that the portfolio requires surgery?
It does, because I mean, if I look at it, you have 5 or 6 funds that are purely blue chip funds, so there's an overexposure in that area. It's all overlapping. And then you have a few funds that are sectoral in nature, not knowing where exactly he would want to put his money and for what objective. And it looks like, he's taken even smaller investments into short-term and medium-term debt funds, which I don't think is the right approach to take. You don't need to sip into a simple, medium-term bond fund. You can always pick one, because it is meant for the medium term. So I think that way there's a little bit of disconnect in his portfolio. If I were to just put it in a very simple way, HDFC Top 200 is a good fund. He can try and consolidate some of his future investments into this fund. He's got a good pick in balance segment, which is again an HDFC fund, which is Prudence. Another good fund he has is the DSP small and mid cap, even the micro cap for that matter from DSP. They are a good fund house when it comes to looking at under-researched companies. I always am bullish on DSP's capability to do that, and maybe he would like to retain his Reliance banking fund, because that is the sectoral exposure that he has. We are bullish at Fund Supermart on banking even in the years to come. Yeah.
Okay, Jayant, let's get your opinion as well. Surgery is required?
Yeah, I do believe that streamlining is required. Of course, Rajesh and my picks may not match precisely, because I was just glancing at his picks. Some of the things may not match, but overall, I believe that your entire portfolio should have primarily a large cap tilt, which is not visible in this portfolio, which is dominated more by sectoral themes, small and mid cap funds. It's okay if he is consciously doing it, but if he is doing it, if he is merely adding on to this laundry list of funds merely because some casual acquaintance has recommended it, or if any agent has strongly recommended it, and then the same agents their advice changes quite quickly. So I think that he has to increase his large cap proportion, and that will give it more stability. And Yeah, I mean Rajesh has already outlined some of the granular details, but primarily we both agree that streamlining is required.
Well, streamlining is required. The portfolio clearly seems all over the place. That's the advice coming in from our experts. Next up, we've got us B. Vaidyanathan calling in from Coimbatore. Hi Vaidyanathan, what's your question?
No, I had given a list of mutual funds which I hold. I have around 7 to 8 funds. I want to know whether should I add, because out of these funds, the HDFC top 200, I have a SIP actually, which I invest, 5,000 rupees every week. And mid-cap opportunities of HDFC also, I invest around 1,000 every week. The remaining other funds, I have a fixed investment, which I want to hold for at least for a period of say 2 to 3 years. So should this portfolio is alright, or should I add or prune it?
Right, so we'll help you with that one right away. Jayant, you heard Vaidyanathan's query. He did say that he makes a weekly investment of about 6,000 rupees spread across 2 funds, while the other ones are of course on the standing. 2 to 3 years, if I can see, there's no exposure to any sort of debt funds. Diversification, again, there's a bit of a problem. But then again, he's a regular investor, which is what you like, and his portfolio is not as large as a previous investor.
Yeah, so there are some pluses and minuses. He has also said that he is a retired person, so his regular income needs, I think, should be met first. So being a retired defense person, I am sure he'll be getting a reasonable pension. But in addition, if he invests either in say bank FDs or some of the post office savings schemes, or even in fixed maturity plans, some of these options might be good for him from the regular income angle. Otherwise, the portfolio is not too bloated. But 3 changes which I would recommend in this are, one is redeem the Sundaram Smile, redeem HDFC Balanced, and redeem HDFC Index Plus. While redeeming, just take care that your 1 year holding period is over, so that you may not have to pay any exit load, and also that will save you from any long-term capital gains tax, for any equity-oriented fund. So whatever proceeds he gets from these, he could reinvest in some of the other diversified mainstream funds that he has.
Right. So there you go, Vaidyanathan. Make sure you in fact, Jayant indicates that you could sell Sundaram Smile, HDFC Balance Fund and HDFC Index Plus. So make sure you've held this for over years so you can avoid any sort of tax on that one. And of course, with the money that's relieved, you can look at counters like Reliance Equity Advantage and Tata Equity Private Equity Fund. Rajesh, what are you making of Vaidyanathan's portfolio? He's 58, retired,
Yes,
and a regular investor.
Yeah, I mean, Samina, one concern I have here is that while he does mention that he is looking at investing regularly, he is mentioned on the call that he is looking at a 3-year time frame for this investment. My first suggestion to Mr. Vaidyanathan is, having served in the defense, I mean, I'm sure he appreciates the long-term perspective of being in a place. I think for all the equity funds, if his existing investments into fixed income and the pensions take him through his requirements during the month, he should just stay put for at least the next 5-6 years. I mean, he still has time with him. That's one. Second, I would also suggest that right now, since the interest rates are good, fairly high, a person like him could gain out of investing into some of the fixed maturity plans coming from the mutual fund space. So these are a couple of quick takes on his portfolio. As Jayant already mentioned, I mean, Sundaram Smile is a fund he could avoid. I think similarly, if I look at it, he can also consider moving some of his money into monthly income plan kind of structures where there is a higher exposure into fixed income and lesser into equity. But I mean, this I'm sharing from a perspective that the portfolio that I get to see seems to be very highly skewed to equity. So for your age and for your requirement, I think that's what I can say. So that's
okay. So the investor needs to streamline his portfolio a little bit, add on a few, delete a few, and of course you would definitely make money on your portfolio. It's time now we take a quick break, but Bianca is also standing by with the news update.
This is NDTV, and you're watching NDTV Profit.
Welcome back. You're watching BioCell. Let's bring in our next caller. Mr. D. Jayakumar is joining us now from Coimbatore. Mr. Jayakumar, good afternoon, sir. Go ahead, ask your question.
Good afternoon.
Yes, sir. Go ahead.
Sir, I invested in HDFC Prudence Growth Fund. Now I want to know whether the fund is eligible for long-term capital gain tax if I redeem after 1 year.
Okay. And you want to add on more funds?
Pardon, sir?
You want to bring on more, you want to buy more funds which are eligible for long-term capital gains tax?
Yeah, my second query is that only. I want to buy more fund in this category of balanced fund. It is eligible for long-term capital gain tax.
Okay, fair enough. So, tax benefit as well as diversification benefit is what you are seeking at this point of time. Rajesh, let me get your opinion first. Which funds do you think offer both?
I think for this particular query, for HDFC Prudence, he is already in the clear. As long as any balance fund is investing more than 65% of its corpus into Indian equities, the investor who is invested into any growth scheme in that fund is eligible to get the long-term capital gain exemption. That's the basic, structure for taxation. Any other balance fund which has got more than 65% of exposure in equity would qualify. If you would like to add on, some more funds in this category, I mean, one suggestion I have for him would be the DSP BlackRock Balance Fund, other than the HDFC Prudence. And HDFC Prudence, I must say, is a very good pick in this category. So he should be happy that he's got something good.
Okay, Jayant, your opinion, which fund offers a mix of both tax benefit as well as diversification, a balanced fund that you can suggest for the investor?
Yeah, I mean, all equity-oriented balanced funds offer the same tax benefits. That is, no capital gains tax if you sell it after a holding period of 1 year. So the funds which conform to this are, one is DSP balanced, and some other good ones are Reliance regular savings balanced, and FT India balanced fund, and Tata balanced. All these are good ones. In addition, there is one more test that you can undertake to know whether a particular balance fund is eligible or not. Of course, this can be done in hindsight only, because once you redeem it, if your redemption statement shows a deduction for STT, so then you can assume that it is eligible for zero long-term capital gains tax. But this is usually known in hindsight, or you can just call up the call center and check out a day before redemption to verify this.
Okay, so that's the view forward. That's how you should look at tweaking your portfolio. That's how you should look at adding on to perhaps maximize the benefit that you're getting from your mutual fund. The next one, we have an email from Sandeep, who writes to us from Pune. He's saying he's actually investing 30,000 investment per month in PF. He's saying, am I investing a lot in PF? What other options I have for investment? I'm not too sure whether he means provident fund, because again that's of course something that the company actually deducts. So I'm not too sure I can get his question completely legible here. But let me then and ask our experts, what are the options that the investor has? Jayant, let's assume here that the investor is not having much of an investment at this point of time, excluding the PF, which of course is deducted from his salary, and then the company also chips in with an equal amount. So moving on, what kind of advice would you give him? So if you were to devise his portfolio with, let's say, 50,000 kind of an investment, or even 1 lakh kind of investment, how would you break it up between a mutual fund and various other schemes as well?
Yeah, Ashu, as you have presumed that this is EPF, even I am presuming the same, because if it is PPF, for example, I mean, investing 30,000 per month is absolutely pointless, because 70,000 is the limit, and any amount which is parked in a PPF beyond that, he will not earn any interest on that. Regarding EPF, there is a way of investing more than the mandated 12%, because your contribution can certainly exceed the employer's contribution. So, but even then, I mean, 30,000 per month seems to be excessive. So, a certain rebalancing is preferable. So, like what you said, if he has a certain X amount, I think that presuming he does not have any equity-oriented exposure, he could begin nibbling at it by investing in certain diversified equity funds which are true to label, that is, which are diversified in the true sense and which are conservatively managed. Two good examples are one is Fidelity Equity Fund and the second is DSP Top 100. So both these are funds with a good track record. So he could begin investing through the monthly SIP route in these. Once he is more comfortable with the volatility as well as the returns associated with these two funds, he could then extend it to certain other so-called riskier, that is more volatile funds in the mid-cap space. For example, IDFC Premier Equity or HDFC Mid-Cap. And then review the entire portfolio, say once a year, and then take things as they come.
Okay, and Rajesh, what would be your advice to this investor who has, again, let's presume that he has a little bit of investment in EPF, and let's assume that PPF is also something he's looking at. So, as Jayant also mentioned, equity is something he should immediately focus on. How would you look at devising his portfolio?
True. I mean, two things here. I mean, he's a young man, 36 years in Pune and working for the government, which means he doesn't have the worry of, job security. So, I mean, that way, if you look at it, he is well placed to start riding on the growth story India can offer, definitely. And if he is only looking at public provident fund, I mean, Jayant has already mentioned the follies of the flip side of trying to do too much on that. I think for 36 years, I mean, if he is willing to take a little bit of risk, and I would definitely suggest that he should seriously ask this question to himself, because one fundamental thing that many of us tend to skip is that inflation can eat away whatever we have earned and saved until now, because everything else in the world tends to get costlier, and your money seems to be losing its value, and therefore you know for sure that your money isn't working for you. I think one problem, if he just relies on the PF, is that he may not be able to beat inflation. And I think if somebody needs to even think of beating inflation today in India, it will be not so very it will not be very prudent to just look at fixed income investments. There should be a little bit of equity, and I mean, a couple of funds already suggested by Jayant. I am with him on his suggestions. Maybe I would suggest that he should definitely start looking at systematic investments into mutual funds. I think that's a discipline and a simple way of accumulating your savings, and also giving it an opportunity to beat inflation.
Okay.
That's my suggestion.
Okay. Let's welcome in our next caller. Mahesh Yelchuru joins us now from Bangalore. Mahesh, go ahead, ask your question. Mahesh, if you can hear me, go ahead, ask your question. What would you like to know? Okay, we've lost, I think, the caller there. Mahesh, if you can hear me, go ahead. What would you like to know? Okay, Mahesh wants to know that he has Aviva's Sachin Century plan, premium 15,000, 10-year term policy. He says, should I hold on to the policy? And Jayant, I've heard a lot about this one. A lot of people actually like this particular policy. What's so special about this one? Should the investor, should Mahesh be holding on to this?
See, actually, there are a lot of policy holders. I mean, I really don't call them investors. I just call them policy holders. They ask this question after investing into such things. So while this question should be asked before, but anyway, this is a type 2 endowment tulip. So by this, what we mean is that whenever this policy matures or on the demise of the policy holder, the family or the holder, if he is alive, will get both the sum assured as well as the fund value which has been generated over the term of the policy. So that is what a type 2 is. In addition, since there is an endowment aspect to it, after a certain period, I think usually it is 10 years, there will be a certain loyalty addition added to the policy value based on the fund value at the beginning of each year from that period. One positive aspect of this fund is that a very pernicious charge which is charged by insurance companies, known as the premium allocation charge, that is not charged in this policy. So 100% of the premium that you invest, add every year to the policy is fully invested. But there are certain other charges which are common to ULIPs, like fund administration charges, mortality, etc., which will anyway be deducted. Now regarding this particular policyholder's query, whether to hold it or not, I mean that will depend on certain things like which options he has chosen. There are 7 different investment options in this policy. So what I usually suggest to people who invest in ULIPs is that they stay put during the entire term, because the longer they stay put, the greater the chance of them recovering the huge front-loaded expenses that they are bearing. So, and within that, choose the option with the highest exposure to equity, especially if you are investing for a period of 10 years or beyond. So for him it's the same advice, like stay put and choose the option with the highest proportion of equity investments.
Rajesh, your opinion?
Yes, absolutely. I mean, Jayant, you said it, because there's no point running away from a ULIP that you've already, put your neck into. I mean, one suggestion I have for Mahesh is that, he should ask himself, why does he even have this question in his mind that, should I hold on to this policy at this point in time? Because anytime you surrender, anytime you decide to come out of a ULIP policy, it means that you are inviting what we call the surrender value. And especially for this policy, what I have gathered is that the surrender charges for this policy could be anywhere between 10 to 30% as surrender charges, and this is applied on the premium that you paid after the first year, if I'm not mistaken. So the surrender charges are high, therefore it is another deterrent for him to exercise that option of coming out, and he just needs to stick with that investment horizon of 10 years. I mean, that will be a better service to the money is already invested into this product.
Okay, let me just talk about VATech VABAG. The stock's slightly under the weather, but the management has come out with a press release. The board has approved a stock split. The stock's down actually. It came down sharply from the day's highest point, but I think the numbers were just about in line with expectations. But the stock split has been announced by the VATech VABAG board. We'll come back after this short break, resume our Q&A session with our experts on some of your other queries regarding the mutual fund space, and also any insurance related queries you also have. Stay with us, lots more coming up next. Welcome back. You're watching Buy or Sell, the mutual fund special on a Friday afternoon. Let's move on and let's bring in our next query. The next one is also regarding the pension space. Panchanan Panda is joining us now from Orissa. Mr. Panda, hi, good afternoon. Go ahead, sir. Ask your question.
Sir, hello.
Yes, sir. I can hear you. Go ahead.
सर, मैं ओडिशा से पंचानन पंडा LNT कंसल्टेंट से बोल रहा हूँ.
जी, बोलिए.
सर, को लाइफ इंश्योरेंस में पेंशन प्लान में कौन सा अच्छा, जो ट्रेडिशनल पेंशन प्लान है, कौन सा अच्छा है, जो अच्छा बोनस देता है, वो ट्रेडिशनल पेंशन प्लान बता सकते हैं?
बिल्कुल बताएंगे जी. आपकी उम्र कितनी है?
40 सर.
47.
हेलो सर.
यस सर.
सर, ये कौन सा पेंशन प्लान अच्छा बोनस देता है?
जी बिल्कुल,
वो बता सकते हैं?
जी
सर,
बिल्कुल.
सेकंड क्वेश्चन है मेरा. सर, मैं म्यूचुअल फंड इन्वेस्टर हूँ.
जी.
लास्ट 2007 में 2 लाख रुपया 2007 में 2 लाख रुपया
जी
इंफ्रास्ट्रक्चर फंड में रखा था सर. वेराइज इंफ्रास्ट्रक्चर फंड, कैपेक्स, सुंदरम कैपेक्स, ब्लैक रॉक टाइगर फंड और टाटा इंफ्रास्ट्रक्चर और ICICI इंफ्रास्ट्रक्चर. सर, इसमें क्या करूं, जो ग्रोथ नहीं हो रहा है, या रखूं या रिडम्पशन कर दूं?
अच्छा, चलिए ठीक है.
यही 2 क्वेश्चन सर, बेसिक क्वेश्चन 2 थे.
जी बिल्कुल. राजेश, पहले आपसे शुरू करते हैं. उनकी उम्र उन्होंने 47 साल बताई है. 47 इयर्स की उनकी उम्र है. पेंशन प्लान लेना चाहते हैं, तो एक कायदे से अगर मान के चले तो प्रीमियम उनको बहुत ज्यादा देना पड़ेगा इस समय में, और वो चाहते हैं कि ऐसा पेंशन प्लान हो जो उनको बोनस भी दे। क्या सुझाव देंगे आप उनको?
दो सुझाव। एक, दोनों LIC का ट्रेडिशनल प्लान्स है। एक है न्यू जीवन धारा 1 करके एक ऑप्शन है, और दूसरा न्यू जीवन सुरक्षा 1। दीज टू आर traditional policies which is what he is trying to look at, pensions. दूसरी बात, इसमें annuities, deferred annuities है, so that will help him because after he maybe looks at retirement, say 60-65 years, then there is some amount of money that comes on a deferred basis and it's not coming all together. So that is like replacing a monthly or a quarterly income for yourself as an annuity. Both these policies, they also have an option to provide for simple but the simple revisionary bonuses that LIC would declare from time to time, and they are able to participate in the profits of the corporation. So if LIC does well, then he should be happy because he would get some portion of that growth that LIC has. So these are my two simple picks for him, and as far as his mutual fund query is concerned, I think unfortunately he has got his money into a few laggards. If he is not really happy with what he's got in return from his investments, I think the couple of funds that he mentioned, he should just be taking his money out and putting them into a few other plans. He's 47 years, he can at least give another 10-15 years for his money to work for him. I think then what he should do is move out from funds like Tata Infrastructure, very hardcore sectoral fund. Better to move it to a broad-based fund, because that would serve his requirements of taking the equity exposure at the same time lowering the risk, because he is already at 47. So maybe I will just suggest that he should look at a few funds like Franklin Blue Chip Fund or HDFC Top 200. These are my suggestions for Mr. Panda.
Okay, Jayant, your opinion?
पंचानन जी, जैसे राजेश जी ने अभी बताया कि ट्रेडिशनल प्लान्स जो है ये केवल डेट इंस्ट्रूमेंट्स में निवेश करते हैं और इनमें कोई इक्विटी एक्सपोजर होता नहीं है। तो अगर आपको ऐसा प्लान चाहिए जिसमें कोई इक्विटी एक्सपोजर नहीं हो तो आप ट्रेडिशनल प्लान्स चुन सकते हैं। लेकिन हमेशा मैंने देखा है कि 10 साल या उसके ऊपर की अगर अपनी निवेश की अवधि है तो थोड़ा इक्विटी का हम ऐड करें तो अच्छा है। लेकिन अगर आपने ठान ही लिया है कि आप ट्रेडिशनल प्लान में ही निवेश करना चाहते हो तो SBI का एक लाइफ लॉन्ग पेंशन प्लस एक अच्छा है, और LIC का और एक प्लान है जीवन निधि। ये दोनों डेफर्ड एन्युइटीज है। इसका मतलब यह है कि आपको थोड़े साल के लिए निवेश करना पड़ेगा, लाइक इन योर केस शायद 13 साल के लिए। तो जब आप 60 साल के होंगे तभी आप ये अमाउंट विड्रॉ कर सकते हो। और पेंशन प्लान का एक फीचर है कि आप पूरा अमाउंट कभी विड्रॉ नहीं कर सकते हो। तो 60 साल की उम्र में भी आप जो भी फंड वैल्यू है उसका सिर्फ 1/3 अमाउंट आप विड्रॉ कर सकते हो, और बैलेंस एक कंपलसरी एक एन्युइटी में कन्वर्ट हो जाएगा। इसका मतलब आपको एक मासिक पेंशन उसमें से मिलता रहेगा। जो इंफ्रास्ट्रक्चर फंड्स आपने चुने हैं, एक तो टाइमिंग आपका गलत था क्योंकि एकदम हाईएस्ट NAV में शायद आपने लिया है ये। प्लस 4 में से केवल टाटा इंफ्रास्ट्रक्चर एक ऐसा फंड है जिसका परफॉर्मेंस थोड़ा अच्छा है, लेकिन ये पूरा इंफ्रास्ट्रक्चर सेक्टर लास्ट 3-3.5 साल में कुछ परफॉर्म नहीं किया है। तो एक ऑप्शन ये है कि आप अपना लॉस बुक करें और कोई अच्छा लार्ज कैप या लार्ज टू मिड कैप फंड जैसे एक फ्रैंकलिन ब्लू चिप है या फिडेलिटी इक्विटी, इसमें आप मंथली SIP के जरिए निवेश करें। और अगर आपको ये इन चारों में से कोई एक इंफ्रास्ट्रक्चर फंड अगर रखना है तो आप केवल टाटा इंफ्रास्ट्रक्चर फंड रख सकते हो, और बाकी 3 में लॉस बुक करके कोई डाइवर्सिफाइड इक्विटी फंड जो मैंने अभी बोले जैसे फ्रैंकलिन ब्लू चिप या फिडेलिटी इक्विटी, उसमें आप ये पैसा मंथली SIP के जरिए निवेश कर सकते हो।
चलिए ठीक है, तो थोड़ा सा इक्विटी में एक्सपोजर रखिए, लेकिन हमारे विशेषज्ञों ने आपको जो सुझाव दिए हैं उन पे अमल कीजिए तो आपको जरूर मुनाफा होगा आगे जाके. Rajesh and Jayant, thank you so much for joining us. I appreciate your time and your comments. Thank you so much for enlightening investors on what should be their decisions on how to streamline their portfolios and how to generate better returns. Good to have you with us. On that note, let me wrap up this show, but stay with us. Corporate action coming up next on Power Lunch.